Hello investors and welcome back to the channel. I'm Mitali Toke, here to simplify mutual fund investing and guide you on a smarter wealth creation journey. Today we are diving into an exciting and strategic theme, India's defense sector. With rising border tensions, terrorism threats and a growing push for self-reliance, defense is no longer just a national priority making headlines. It's becoming a powerful investment opportunity as well. In this video, I'll take you through the best mutual funds tapping into India's defense growth story and whether this high potential sector deserves a place in your portfolio. So stay tuned. You all must be aware of the recent tensions that flared up between India and Pakistan after a terror attack in Kashmir, followed by a sharp military exchange with drones and missiles before a ceasefire was called. This fresh conflict reminds us why India's defense sector is so crucial and why it's catching the eye of every smart investor. Several defense related companies in India have room for growth. These could be firms specializing in aerospace, arms manufacturing, surveillance, logistics, next generation technologies, radar, missile, AI, cybersecurity, and many more. Both PSUs and private defense players are well positioned to benefit from sustained government orders as well as exports. Amid growing border disputes and terrorism concerns, defense sector stocks and mutual funds are now in the spotlight. The Nifty India Defense TRI Index tracks defense stocks in India. It has gained 32.2% in the last 3 months. This compares favorably with the Nifty 50 TRI, which is up by 11.3%. Defense sector mutual funds have delivered excellent returns to investors recently. Here we have listed the top 5 funds under this category. Chosen for their sectoral relevance with high allocation to defense stocks, portfolio quality and potential to capture long-term growth in India's defense sector. First is the HDFC Defense Fund. It is India's first mutual fund that invests only in defense-related companies. It was launched in June 2023 and currently has a corpus of Rs 54.87 billion. It seeks to deliver long-term capital appreciation by investing in defense and elite sector companies' securities. The scheme holds a portfolio of 22 stocks, wherein 46.14% are large caps, 34.59% are small caps, and the remaining 14.52% are mid caps. The portfolio is fairly concentrated but diversified enough to capture both large cap stability and small cap innovation. The fund aims to capture the full value chain from heavy engineering and equipment manufacturers to technology driven defense solution providers. This makes it an all-weather play on India's military modernization theme. Apart from this, the category includes 2 passively managed defense-oriented funds. Second is the Aditya Birla Sun Life Nifty India Defense Index Fund. This is a defense sector specific index fund. It seeks to mirror the Nifty India Defense Index. It was launched in August 2024 and currently holds an AUM of Rs 4.6 billion. Since inception, the fund has generated an absolute return of about 18.98%. The scheme has a portfolio of 18 stocks across market cap, of which majority are in large caps like 38.33% and mid caps 39.15%. The top holdings of the funds are all vital pillars of India's defense modernization. Please note that as the index fund, the scheme's performance is subject to the performance of underlying Nifty India Defense Index. Third is the Motilal Oswal Nifty India Defense Index Fund. Launched in July 2024, the fund provides investors with an affordable way to invest in India's defense industry. Currently, it has an AUM of Rs 28.75 billion. The scheme's portfolio comprises a blend of large cap, mid cap, and small cap businesses, where the holding pattern and market cap proportion mirrors the underlying index, Nifty India Defense Index. Since inception, the fund has generated an absolute return of about 8.91%. As an index fund, the scheme's performance is subject to the performance of the underlying Nifty India Defense Index. Moreover, there are some diversified equity mutual funds with a high allocation to defense stocks. Fourth is the Samco Flexi Cap Fund. This fund invests across large cap, mid cap, and small cap stocks without any market cap restriction. This gives the fund flexibility to dynamically allocate capital to high conviction ideas based on market opportunities. Incepted in February 2022, the scheme has an AUM of Rs 4.43 billion presently. The scheme invests in a focused list of around 28 stocks that presents a high conviction portfolio approach. As of 30th April, the fund is heavily inclined towards India's defense industry. The overall allocation to defense stock is around 15.47% of its assets. The portfolio indicates the fund manager's optimism in the sector's long-term growth prospects. Last but not the least is Motilal Oswal Large and Mid Cap Fund. Launched in October 2019, Motilal Oswal Large and Mid Cap Fund is designed to capture growth opportunities across established companies and emerging leaders. Currently, it holds an AUM of Rs 91.76 billion. In recent times, the fund has increased its exposure to India's defense sector. This is a reflection of its strategy to align with long-term structural themes. The scheme holds a portfolio of 30 stocks with a tactical allocation across market caps to boost returns. The fund tilts towards defense stocks with a total allocation of 14.81%. By incorporating high conviction defense stocks into its portfolio, the fund has positioned itself to profit from this cyclical market trend. Now, in conclusion, India's defense industry is poised for a multi-decade growth trajectory as the government makes record capital investments in defense purchases. This produces firm demands for local production, technology improvement, and advanced weapons capabilities, providing constant revenue visibility for defense companies. In addition, global defense partnerships, rising export orders, and the increasing role of private players are expanding in the sector's long-term growth opportunities. Having said that, the sudden spurt in investors' interest has already pushed defense-related stocks up, leading to stretched valuations. The Nifty India Defense Index, for example, is already quoting a price-to-earnings multiple of 57.71 against 22.43 for the broader Nifty 50. Likewise, its price to book value is 13.84 against 3.71 for the Nifty 50. This huge gap highlights valuation risk in these stocks. Investors will have to keep this in mind while investing in defense mutual funds. Additionally, you should remain cautious of any slowdown in the defense spending in the future. A measured assessment of market conditions and valuation levels is essential when considering exposure to defense sector. Signing off for now, happy investing. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully. Registration granted by SEBI, membership of BASL and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.